the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares were down today despite most Asian markets being in the green early on. So the Straits Times Index was down 0.41% at 4,291 points at about 2:14 p.m. Singapore time, and that's worth a value turnover of some 830 million Sing dollars in the broader market. Now, let's take you through the closing numbers. The STI ended in the red, down 0.25% at 4,297 points. In terms of value turnover, that's 1.39 billion Sing dollars. Now, gainers trailed losers 275 versus 291. Top advances for today, we've got for you UOL, Propnex, and Venture Core, and top decliners we've got here GMHUSD, Jardine Cycle, and Carriage and Holpa. Now, in terms of counters to watch, we have Thakral, because the company hopes to benefit from the proposed London listing of Project Glow Topco, which is the parent of UK-based the beauty tech group. Now, Thakral holds a 9.32% effective interest in the beauty tech group. Elsewhere, for movements in Asia amid political uncertainties in Japan and also in Indonesia, to MetaOptics surging 25% on its Catalist debut on the SGX. We've got more corporate and international headlines in focus. Also on deck, the Nasdaq's record close and how Tencent is reportedly considering its first public debt offering in 4 years, and this time targeting the dim sum market. A lot to watch, and joining me on the line is Thilan Wickramasinghe, Head of Equity Research at Maybank Securities. Thilan, welcome back to the show.
Great to be here.
Great to have you. And Thilan, let's start with the Singapore stock market as usual. I mean, overnight we saw the Nasdaq closing at a record high. So how did the STI fare today, and any surprises if we look at the biggest movers?
Yeah, I mean, I think the STI failed to take a cue from the Nasdaq and ended down today. I think investors are assessing multiple conflicting signals with the weak Europe after the French Prime Minister was ousted and the US 10-year rate rising on the other hand as well. We had diverging performances in Japan and Indonesia. So I think that's where the sort of market mood is. The top performers are mostly property developers, like UOL Group, Hong Kong Land, on continued falls in the domestic benchmark rates. And we also saw the REITs benefiting as well, particularly names like Mint. We also, on the sell side, we saw names like Thai Bev, where investors are awaiting policies with the new Thai PM. And I think we are also starting to see some profit-taking and rotation out of the industrials as well, given how well they've done, particularly names like Sembcorp and Citrium.
And I do agree with you in terms of Asian movements. It's quite a complicated picture there. I mean, earlier was higher on rate cut bets. Then after that, we've got some clawing back of the gains as well. So if we zoom in on the companies to watch on the SGX, first things first, we do have Thakral. Thakral hopes to benefit from the proposed London listing of Project Glow Topco, which is the parent of UK-based the beauty tech group. Thakral holds some 9% effective interest in the beauty tech group. So how significant is this move for Thakral where the share price movements are concerned?
You're right. So, I mean, Thakral holds about 9.32% effective interest in the beauty tech group through an investment in the ultimate holding company, Project Glow Topco. The total carrying value of that investment, according to the 2024 annual report, is about $17 million, and Thakral's market cap is about $200 million. So, fairly sizable. Management is saying that there is potential of a positive uplift to the group's financial position from its stake in the beauty tech group. But here's the thing, though. They have not yet received any information on the potential valuation of beauty tech group. And so they'll have to complete the IPO, get listed on the London Exchange before we actually see some realization of value. Having said that, beauty tech is profitable. They did generate an EBITDA of around $40 million, so which in theory should deliver some reasonable valuation.
And another counter to watch, Thilan, is our local boss, the SGX, because it said its securities market turnover rose 17% on the year to 33.6 billion Sing dollars. Now, what does this mean for investors of SGX and also investors looking to invest in counters listed on the SGX?
Yes, I think on the stock itself, what we're seeing is SGX's multi-asset strategy playing out. What was actually notable for me was that August derivative volumes were up 11%. The biggest contributor in that was the China A50 index futures, which was actually up about 66%. This shows Singapore is a venue of choice in managing and participating in China risk. We also saw record open interest in commodities, and we've seen quite a lot of volatility in this commodities complex recently as well. So I think all of this points to SGX's liquidity pools being used to hedge and manage multi-asset risks across the region. Now, apart from that, I think the market is also feeling the tailwinds of an equities bull run. Policy measures have been quite positive. We've also seen Singapore enjoying its safe haven status. So I think, all of those coming together, plus new IPO momentum as well, is further adding to that. So I think this momentum can last going to the rest of the year, and certainly with all this global uncertainty around.
You talked about IPOs, Thilan, and we must talk about how semiconductor optics company MetaOptics share price rose as much as 25% this morning on its trading debut on the Catalist board of the SGX. What should we know about MetaOptics, and how would you read into its share price movements today, given how the company has yet to turn a profit?
Yeah, MetaOptics are raising funds mainly for product development, R&D, and a portion of that will also go into overseas expansion. I think investors are bullish about the outlook and the demand for its single-layered glass lenses, also known as meta lenses, which they're still developing. Now, these single-layered lenses can increase efficiency of many optical components used in consumer electronics, augmented reality, virtual reality headsets, and scientific imaging, which are currently a lot more bulkier because they have to use stacked lenses. Plus, I think what we're seeing is that the Singapore IPO space is also heating up, and that explains part of the positive momentum on the listing as well. But I have to, point out that the first-day performance is still a little bit cooler than what we saw with some of the other listings that we saw recently, like Lam Chong and Design Format. And I think this may be because investors are differentiating between profitable companies and unprofitable companies. Having said that, in order to have a much more diverse equity market, having companies like MetaOptics list is very, very positive for the Singapore market.
Now, if you're just tuning in, we're in conversation with Thilan Wickramasinghe, Head of Equity Research at Maybank Securities. Well, Thilan, across the region, Asian markets, earlier they were mostly higher. They ended in a mixed bag. So we've got a lot of things happening. One, rate cut bets that's fueling optimism. Now, if we look at Japan spiked at a new record but closed in the red. Investors there monitoring the political upheaval. And in Indonesia, stocks fell after President Prabowo Subianto removed its finance minister in a cabinet reshuffle. So how would you read into the region's movements as a whole?
Let's start with Japan. Prime Minister Ishiba is out, and he was seen as a fiscal hawk. Now, whoever comes in will need to secure a broad-based coalition of opposition parties. All the opposition parties have one thing in common in Japan. They all want stimulus. So we think in order to form a government, the incoming prime minister will need to adopt a very expansionary stance. Now, in Indonesia, the removal of Sri Mulyani as finance minister was a shock to the market, although there was some expectations of this for some time. The new finance minister, Prabaya, he has about 25 years of experience in economics and market-related roles. Comments from him so far suggest that he will maintain fiscal discipline and prevent disruptions to the financial system, but he is also seeking to accelerate government spending to speed up economic growth as well. We think near-term revenue pressure and expenditure needs are unlikely to change significantly under this new finance minister. The administration's spending priorities are set from the top and the finance ministry tends to be the implementer. Without much possibility of rising, taxes soon, the rupiah will likely face pressure in the short term. And this also means that the central bank will have very little room to cut interest rates as well. So this should, likely put some downside on the Indo market.
Okay, and I hope we're still in time for afternoon tea right now, Thilan. Let's talk dim sum. Dim sum bonds, to be exact. Tencent is reportedly considering its first public debt offering in 4 years, targeting the dim sum market. So first things first, what's a dim sum bond to begin with, and how would you read into the latest news?
So a dim sum bond is basically a Chinese yuan-dominated bond issued outside mainland China and mostly in Hong Kong. It lets companies raise RMB offshore where interest rates are low and the rules are a little bit more flexible. The market has been booming. In August alone, issuances hit around 1.23 trillion yuan, with governments like Guangdong and Shenzhen leading the way. And investors love these deals. Some government bonds were nearly 7 times oversubscribed. Chinese buyers still dominate, but foreign demand is rising as the RMB has started to stabilize. Looking ahead, most dim sum bonds are short-term today, but with Fed rate cuts expected, we could see longer-term money actually coming in as well. Now, for Tencent, I think the scale, is going to be the real test. If demand is strong, it should pave the way for more Chinese companies to follow.
And finally, before I let you go, Thilan, India's central bank steadily cut its purchases of U.S. treasuries and increased gold buying even before Trump's tariffs. And at the same time, if we look at gold, it surged to a record high above the $3,600 mark. What would countries' diversification away from U.S. treasuries and into gold mean for the USD and the yellow metal? What opportunities does this present for regular investors?
When countries like India are cutting back on U.S. treasuries and buying into gold, even at these prices, it's a clear signal that the U.S. dollar is losing some of its shine. Normally, treasuries attract steady demand, and that creates a built-in need for dollars. But when central banks step back, that safety net weakens, and over time the dollar tends to drift lower. Now, you might think higher treasury yields would make the dollar more attractive, and yes, yields can rise as demand falls. But here's the catch. It sends the wrong signal. Instead of confidence, it says the world is less willing to hold dollars, which ironically undermines the dollar's long-term strength. On the other side, gold is the big winner. Central banks are steadily buying more of it, and supply from mines only grow around 1 to 2% a year. That tight supply and steady demand means that gold prices, don't just spike; they can reset higher. What used to be a ceiling could now be a new floor. So in the short term, of course, both gold and dollar can be volatile around the Fed meetings, inflation numbers, geopolitical events. But the longer-term picture, I think the dollar is facing some headwinds, while gold has a little bit more structural support. Now, for investors, this opens 2 doors. One is gold is now more than just a crisis hedge. It's a predictable long-term play, even whether it's through physical bullion, ETFs, or even mining stocks. China has been buying gold for 10 straight months now. And 2, it encourages diversification from the dollar. Emerging market stocks, commodities, alternative currencies like the euro, yuan, all become a lot more attractive. So I think that's where investors need to kind of have a look at. So treasuries will have a role, but I think, gold and other alternative assets and alternative markets will also now come into play a lot more.
I suppose exciting times ahead. Thanks so much for the insights today, Thilan. That was Thilan Wickramasinghe, Head of Equity Research at Maybank Securities. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.